FXNation, what's up guys? Welcome back to the channel. Welcome back to another video. And in this video guys, let's take a look and do some analysis on gold for the upcoming week, or at least for the upcoming couple days here at the beginning of the week. All right, so here we have gold on the daily chart. So let's just take a quick look at the bigger picture, see what we can identify. That way we can use that on the lower time frames to help us start to figure out where we could go on gold. So there's a couple different scenarios here that I see possibly happening. I'm going to share those with you so you guys could be prepared for either scenario that plays out, and you can go ahead and trade this particular pair. So on gold, let's first get out the way. Where is price likely to go? Where are areas that price is very likely to go? Let's go ahead and mark out actual points of interest, right? So for me right away, this right here is a major point. So why is this area a major point for me? Because you could see going back to April of 2020, we've hit it several times, like on the same spot. All right, so what does that tell me? This tells me essentially that there is a lot of liquidity in this particular area. Same thing can be said for up here at the very top, right? It's been hit twice back in August of 2020 and then got hit again back in March of 2022. Same area, so we know for sure that there's going to be some liquidity up here. Okay, now that we know that those two areas are major areas where liquidity is, what are other areas that do have liquidity that are not as major on this? Because you could obviously, we're talking about, this is quite a few pips. This is over 3,000 pips apart. Let's go in a little bit closer to where price action is, and let's focus in on where price action is right here. And if we just take this last part here, okay, where is a major part of possibly where liquidity could be sitting at that market makers could go towards? Well, the first thing I see is right here. This is going to be an area, I believe, of good liquidity where market makers could go. Okay, now that we have these areas of interest pointed out on the chart here from the daily time frame, okay. Now let's go into a lower time frame and take a look and take a little bit of a deeper dive and see what scenarios could we play out here because of these actual areas. All right, so now we're looking at gold on a 1 hour chart. All right, the two boxes here that I have labeled out are basically going to be this right here is a peak formation high. All right, and then over here down here is a peak formation low. Okay, so at least you know where we're coming from, or the most recent peak highs, peak lows. So this right here is a peak formation high. This is a peak formation low. All right, so that's where we're coming from. And you can see we've been selling off. Now, just because we're on a 1 hour time frame doesn't mean that we can't look at other areas of liquidity that could be in recent price action. And so when I look at this, so the first thing that my eyes tries to find is where are areas of liquidity on the 1 hour chart in recent price action, because recent price action to me matters because it's going to allow us to know or try to figure out where is price going to go, what kind of movements can we expect from price. The first area for me that I gravitate to is this area down here. Okay, there's some good liquidity I believe down in this area. Now we still have this area down here, which is from the daily, if you remember, that we just put on there. So we know that there are two major areas of liquidity down here that market makers would like to gravitate to and grab liquidity to get more orders. So essentially, if we're just coming off of a peak formation high, okay, and we're looking to grab and move towards getting liquidity, which is it's been doing that so far. can we essentially get there to these 2 points and still have enough to basically complete a cycle like we just did here? Because every cycle that price action makes, or that any pair makes, so this cycle here is a certain amount of times its own ADR. So in this case, let's say it's 4 times ADR on from the peak formation low to the peak formation high. Let's say from here, because each cycle has its own ADR, depending on how price movement is going, this could be 4.5, this could be 3.5, it depends, right? So as long as you can measure out essentially how far out could price action go based on the current ADR that this is showing. You could see that we've been averaging ADR around 2100 or so, right? So let's say around 2100 is a pretty good accurate number there. All right, so now let's measure this out from here to here, and we're pretty close to what, almost 10,000 or so. Now this is not, one thing I'll tell you about these numbers here that you see where it says 9670.1 for gold. You basically, this is a decimal off. So it's really only 967 pips. Just like the 2100 number, it's really 200 pips or so. But I'm just using the natural numbers, so I don't have to worry about moving over anything. So let's just say 9600. And then we take the 2100 average, and that gives us about a 4.5 times ADR. So to get to this area of liquidity, it would take basically this going 4.5 times ADR, and that's basically right to the limit that we normally see on actual cycles go. So from here to here is 4.5. If price action, let's say, wanted to come down here, okay, if price action wanted to come all the way to the bottom here, which is, let's just say 13, right? And we know that if we take that would put us way over 4.5 times ADR for a full cycle. So in order for price action to come all the way down here, we would first need to basically complete a cycle to here, go back up, okay, for let's say 1 or 2 times ADR, grab some more liquidity, and then go back down. And then basically this would give us another second cycle. Okay, so if price action wants to come basically all the way down to this bottom, here, it's going to have to create 2 cycles to do that. Okay, the first target that we would have for gold is basically right here, because it's the easiest for gold to get to, and we know that it could take just a full cycle to get there. 4.5 times its own ADR. Okay, so that's where I'm heading towards on gold. That's where I should expect gold to go. Now, does that mean that gold is automatically going to move straight down? No, it's not. Okay, just like you see here, this entire move here, just like you see these moves going down, right? They've had retracements, right? So I expect price to come back and retrace and then start to go down again, right? Just like any classic, trend, right? That has retracements, that does this, right? Every trend does that. And so this is no different, right? You'll see that it does have its pullbacks, right? And so I'm interested in getting into trades or finding trades where the pullbacks are happening. The overall picture, I know that we are very likely to come down here because there is nothing here, honestly, where price action would just automatically stop and reverse. Okay, the big major liquidity is right here in this area. Okay, so that's where I'm expecting price action to go to. All right, now where are some retracements where we could likely see price action go back up to is the question. Well, what we could do is we could take a fib, a simple fib, okay, and we could put it from the last retracement, okay, and then we can go back down to where price action is now. Now, here's the important part to this is that this right now, this right here, right, this right here has to be where price action starts to retrace from. We don't know that yet. Okay, so just keep that in mind. I'm just giving you the idea as to what you should do when you get to that point. Okay, so once you get to the point of it starting to retrace, that's when you can use basically a fib retracement tool, all right, to see, okay, how deep is this likely to go? So if this price action were to retrace back, okay, where is good areas that we could see price action retrace to? Okay, well, for me, I would be looking into areas close to either the 50 or, obviously 618 are the two major areas that we look at for possible entry. So if we can get a retracement back into one of these two areas here, these would be good areas where we could possibly see some good rejection from, and we could see some possible good entries. So now that you have an idea of where price action could go or how you could attack this, and this is solely based off of the 1 hour time frame, by the way, we still haven't even gone lower to like a 15-minute time frame. Okay, if you go down to a 15-minute time frame, all right, now we have a lot of different opportunities, because let's just go back here real quick and let me put this this line back on here so we could get this out, use this as a reference here. So let's just say right here so we know where we are. So here is current price action, right? And then we're into the Asian session. Essentially, we literally just started. What kind of price action would we be looking for in order to enter this, a trade here, basically? Ideally, in a situation like this where we want to get a retracement, we would want to see like a type 1 pattern, right? We would want to see a pattern that basically drives price up, gives you a formation up here, and then you could trade it back down. That would be the ideal scenario for this, because we want to get into price action up here. We never want to get into price action for a sell down here. What I'm looking for on gold is I'm looking for more selling options to come about this week. But before the selling options come available, we have to get a retracement first in order to get those options. We know that essentially from the peak formation high, we can get down to where liquidity is on the higher time frame, let's say a 4 hour or even a daily time frame here, with a 4.5 times ADR. So that's where I'm looking for price action to go. So 1712. So basically I'm looking for sell options until we get to around 1712 and we see what happens down here. Okay, if price action is going to go lower and it wants to go all the way down here, this is the daily, liquidation area, then we know that there's got to be 2 cycles that are done essentially to complete that. Okay, because this would be way too much here for this. All right, so guys, I hope this helped in breaking down gold and how I would look at gold for this week. Hopefully this was helpful to you. If you guys like this type of content and you want me to do a different pairs, let me know in the comments and I'll do another pair for tomorrow. Okay, I could do this every day, but just let me know what pair you would like to see next in the comments. All right, and I'll start picking pairs that you guys trade, and we can break down pairs like this every day for you if you want. All right, guys, thank you so much. Have a great rest of the week, guys. Trade safe and trade consistently. Guys, if you need more help with our strategy, or you want to join us in our next class, we are hosting our first master class coming up on August 22nd. This class is probably going to be the best class out of all of them because of the material that's brand new that's being released in this class. All of the new material being released is years of backtesting data that we've been collecting over the years that have helped us determine what are the best things about the strategy, what are the best patterns, what goes into the best patterns. Everything you could possibly think of is going to be in this masterclass. So hopefully, guys, I hope that we will see you in the next masterclass. It starts August 22nd. The link is in the description. And like always, guys, trade safe and trade consistently.